My name's Penny. Here we are looking at Module 2, which is about preparing to invest and basic investment structures. This is our first video. So learning our objectives for this week, you need to be able to discuss the basic steps. This is the financial planning process that we're talking about in this one. Outline the different structures in which investment assets can be held. Discuss the growth in online investing, including educational sites and investment tools and effective use of the internet. Identify the main types and sources of traditional and online investment information. Explain the characteristics, interpretation, uses of commonly cited share market averages and indices. Review the roles of traditional and online stockbrokers. What are their services? Describe the basic types of orders, online transactions, cost and legal aspects, and discuss the roles of investment advisors and investment clubs. Lots of topics for this week. So here we've got a couple of different pictures that are describing the financial planning process. Now this is a little bit different to what we looked at last week. Last week we were looking at the steps to investment, which is from the personal perspective. So remember, step 1 was making sure you had the necessities of life, your insurances, your emergency funds. Here we're looking at it from the financial planner point of view. So if we look at the diagram on the left, the first thing the financial planners are doing are gathering clients' information. So finding out about the client. Step 2, establishing what's the client's goals and objectives, helping them to work out what they are. Step 3, analyze what their current financial situation is. So looking through all that information that they've given. Step 4, developing and presenting a financial plan. And then step 5, implementing the plan. And step 6, monitoring and reviewing. So those last few steps, they're very similar to what we've seen before. Just look at the picture on the right. So very similar. Clarify the present situation for the client. So identifying goals, identifying their financial challenges is just the way they've described it instead of analysing the financial situation. Presenting recommendations, implementing strategies, and monitoring and review. And you can see the references there if you want to go and look at them some more. Each of those are financial planning websites for businesses. So this information is from the Financial Planning Association of Australia, and this is how they describe the financial planning process. So step 1, you need to define the scope of the engagement. So make sure the client understands what's the process that's going to be gone through, find out the client's needs, make sure that as a financial planner that you can meet them. Ask them about their background. If you're the client, then you should ask them about the financial planner's background, how do they work, how they charge, most important. Step 2, identifying the goals. So the client works with the financial planner to work out what the short and long-term goals are. This is very important for figuring out what direction the plan's going to take. Step 3, assess the financial situation. So your financial planner is going to take a look. What are your assets? What are your liabilities? Do you have insurances? What are the investment and tax strategies that you already have? Step 4, the financial planner recommends suitable strategies, products and services, and answers any questions that the client has. So step 5, once the client's happy and has decided what they want to do, then the step 5 is actually putting all that into action. So it might be the client themselves will go ahead and do it, or they might ask the financial planner to help, or there might be specialists that are needed. Perhaps the financial planner finds out that the client does not have a will, and so they will refer them to a solicitor to go and get that done. And step 6 is reviewing. So it's important that at least every year the investments are reviewed and compared to the goals and to check everything's still on track. So we talked about last week, step 1, making sure everything's in place to be able to invest. So here they're saying investing is the second order subject. The first issue is take control of your cash flow. To be able to invest, first of all, you need to be able to meet your everyday bills, should have insurances, emergency buffer, all these different things need to be in place. The cash flow has to be under control first. So financial statements are very important here in financial planning as well as elsewhere. So being able to construct financial statements and developing budgets, that's an integral part of the financial planning process. Financial advisors have to know where their clients stand financially before they can advise them. And these financial plans and budgets, they're just help or aid to the client to be able to tell them, have I met my goals? So without the reports, they won't know. So personal financial statements, they're benchmarks that show how a client has progressed. So if we've got any accounting students here or people familiar with accounting, then you're used to thinking about financial statements in these terms. Balance sheet, your assets, your liabilities, equity. Your income statement, revenue less expenses, telling you if there is a profit or a loss. Cash flow statement and budgets. When we're talking about personal financial statements, it's slightly different. We have, instead of a balance sheet, we have a net worth statement and we have a cash flow statement and budgets. No income statement, but quite similar. So we've heard this before. Investing, second order subject. We've got to take control of our cash flow. How do we take control of the cash flow? Well, to do that, then we need a budget. So I'll be asking you all when I see you next, have you got your budget? How's your budget going? So there's a bit of homework for you if you haven't already got one, or it's a bit sad. Time to pull your budget out and have a look at it. Blame your teachers and the fact you're studying personal asset management. So budget. This is a tool for managing our money. It records all the money coming in, which is our income, and all the money being spent. So what's flowing out, our expenses. Hopefully you'll have a surplus. So what's coming in is greater than what's going out. It could be possible. Hopefully it's just a one-off bad month or week that you'll have less. You'll have a deficit. Your income's less than expenses. Or you could perhaps be perfectly balanced. So there's no magic bullet or one size fits all approach to making a budget. You might need to try out a few different things to see what works best for you. So there are lots of different places you can look for some help. So for example, you can look at the Money Smart government website. They've got helpful ideas, and here we can see an app. There are different apps that you can use. So here's Pocketbook, or you can look on the website, on the web for places, or you can go to good old Excel. I've tried a few different apps and things, but I have to say in the end, Excel won. Excel's got templates in it, so you can try out the templates, or you can just write your own and then it's personalized. The important thing is to get started and start tracking what's happening. The net worth statement is the equivalent of a balance sheet, but it's for people. So let's have a look. We've got one here for Dorothy. So we've got the heading Asset, Owner, the value, and the notes. So we start off with the assets. So Dorothy's got this home in North Parramatta for $1 million, and there's a note here saying no debt. So there's no mortgage for this home. They've got home contents, $150,000, and there's a note saying that this came from the insurance. So that's the value recorded there. So that tells us, gives us a guide for what the contents are worth, and the car. Next, we've got a list of different bank accounts, and we've got superannuation here, some shares in Telstra. You can see in brackets the TLS, the share Australian Stock Exchange code. And over here, it says 600 in the notes at $3.30 and the date, the 1st of April 2019. So here we are nearly 2 years later. So that's a bit out of date. And we can see AMP, Super Direxim, some more super. That's the super. Oh wait, what do I think was the super? St. George Retirement Access Account. Oh, it's actually a bank account. And you can see this is dated at the 30th of June 2018, so even more out of date. So it tells us very roughly, because you can already see that there are lots of things that need improving on this personal balance sheet. Very roughly, Dorothy has a net worth of 1.4 million. She's only got assets, so she's very fortunate. But you can see from looking at this, at the dates, that you really need to go and get some more current information. Let's have a look at the one on the right. Now, that was only for Dorothy, the one on the left. The one on the right is for both Peter and Jane. So we've got their assets. We've got a home in Carlingford, and you can note that the owner, they've got jointly owned. We've got the value in there, and there's a note saying there's a mortgage. So if we look further down under liabilities, we can see the mortgage is there, joint mortgage, $650,000, and there's some information about the interest rate. Go back up to the assets. So we've got the home, there's home contents, and we've got the value of that from the insurance, but it doesn't say when. So you might want to ask some questions to Peter and Jane, or from what date is that? Check that it's current. Got the car. Now you can see here there's a note that this is only Jane's car, no debt. Next we've got a National Australia bank account. We've got some shares in IAG. We've got Peter's super and Jane's super. So that's the total of their assets. Then in liabilities, we have the mortgage, and they've each got their own credit card. And we've got the limit. Now, if you don't know exactly what the balance is, then you can just write in their limit amount here in the liabilities to work out the total. It's not perfect the way you write this personal balance sheet. It's not like writing a balance sheet for a business. It's a bit more rubbery. You can't get exact numbers. So I've got total assets of 1.1 million, 658,000 in liabilities, net worth of nearly $500,000. Now, what would be an interesting thing now would be for you, I'd like you to have a go at writing your personal balance sheet. You don't have to show me, but just have a practice of writing it down for yourself. Be interesting for you to think about all the different assets that you have and the liabilities. How do you come out with your net worth statement? And where would you like that to be in the future? All right.